No one is coming to save you. I can't save you. You have to be your own superhero. Day 2, I'm very proud. Look at that, 2 days in a row. It is not about 16-hour days. It is about consistently doing the damn thing for 1 to 4 hours a day for a reasonable number of times a week over a long enough period of time. This is one of those things. And today I'm going to be talking about why I think real estate is the best path to achieve financial freedom compared to most other strategies. I'm not saying other strategies couldn't get you to financial freedom quicker. I'm not saying that other strategies couldn't make you more profits or more wealth, but when you account for everything, the accessibility, the ability to leverage, when you account for the wealth and financial freedom / the cash flow benefits, I mean, really accessibility is one of the biggest ones. And then the risk tolerance. One of the biggest things I see out there that's a huge issue for people is like, yes, I mean, I see people say, burn the boats, go all in, do this one thing, and you can be super wealthy. Cool. But not everyone has the risk tolerance to go and start up a business from scratch and grind for 18-hour days with the risk of it all falling apart just so you can be wealthy at some point. Like that, you don't need to do that with real estate. That's why it's so awesome. I compare real estate very similar to the stock market. However, the stock market is much more passive, where real estate is much more active. But I'll explain very clearly throughout today's live call why I think that trade-off is so much more worth it. I believe the active piece of real estate, even though it's more work, it is vastly outweighed. Like you get so much more benefits in real estate than you ever could through the stock market. And I'll kind of explain that through my own journey. So back to the point, why do I believe real estate is the best path towards financial freedom? I'm going to get rid of business acquisition, startups, all that kind of stuff, because I think the risk tolerance and the time and effort involved for the majority of people, it's just not accessible. It's just not accessible for the majority of people to go and start up a business, whether it's a startup or to go and try to buy a business that they know nothing about. So, and that's not even my lane, right? I did it through real estate. So of course I'm going to think real estate's the best way to do it. It's the way that I freaking did it. Like, but 5 years ago, when I first started in real estate investing, I was going to do it through the stock market. I understood this movement called FIRE, financial independence, retire early. Essentially, you have income, whatever you spend, like whatever you don't spend, the income minus expenses is your savings. Whatever your savings is, gets invested into passive index funds, and over long enough periods of time, it increases in value. Once you hit a certain amount, you can pull out basically 4% of that every year, and you can use that for your expenses for the rest of your life. So if you had $1 million, for every $1 million you had invested, you can pull out $40,000 of that and live off $40,000. So if you wanted $80,000, you would need $2 million. If you wanted 100,000, you need 2.5 million. That's the idea of how you get there. And the only variables you really had, right? It's savings, get invested, and then it compounds over time, right? The sooner you start, the more it compounds and grows, but it still takes time for that growth. So the only thing you really can control is your income and your expenses. That's awesome, but there's only so much you can reduce your expenses and only so much for the majority of people where you can increase your income. And as someone who was active duty military at that time, it didn't matter what I did. I was not going to be able to increase my income. I got promoted pretty much as quickly as you could to becoming a captain in the Army, but there was literally not much way to increase the income. So when I compare that to what my overall goal was to be financially free early, even the way I was doing it, we were investing like 50, 60% of our income, living so lean. And it's like, okay, cool. So instead of retiring at 70 or 65, now it's 60, now it's 55, now it's 50, now it's 45. Okay, still, that's awesome. I've been able to compress this massively, but I knew something had to give because there was no way that I didn't really want to work. I didn't really want to work for other people, right? I didn't want to work for someone else until I was in my mid 40s. At that point, had kids. My kids, like I didn't want to work for someone else while raising kids because I didn't want someone else to tell me what I could or could not do, where I could travel to or not, when I could travel or not. If I had to miss a very important time in my family's life for the something at work, some stupid meeting or some crap that they think is more important. Like I didn't want someone else to have that kind of control over my life indefinitely. And especially not during when my children are young, right? I have a 1-year-old now. I did not want someone to affect that. And I know a lot of people who watch my channel, you guys are actually older and you went through a lot of that. And all you can do now is either you take action now, so then in 5 years from now, your life is different than where it's at, or you keep doing the same thing. I mean, at the end of the day, no one is coming to save you. I can't save you. You have to be your own superhero. If you want your life to look different in a year from now, 3 years from now, 5 years from now, you're going to be the one who has to save yourself. You're going to have to take extreme ownership and accountability and put in that work to then achieve or at least increase the likelihood of achieving the results that you want. You cannot guarantee the results that you want, right? But all you can do is increase the likelihood by taking the actions that you know you should. So that being said, the stock market wasn't really going to be that thing for me. So that's when I started learning about real estate investing and the concept of house hacking. With me as a veteran, I was able to use my VA loan to buy up to a 4-unit property with 0% down payment. There were still closing costs and all that, but it was under $20,000 total for the 2-unit property that I bought, right? And if you're not a veteran, no worries. You don't need to be. You have an FHA loan, but it's a 3.5% down loan product. If it's your first time buying a property, there's FHA loan, like down payment assistance. So there's down payment assistance where you could still pay close to $0 down. There's 5% conventional loans, right? So for $1 million property, you bring in $50,000. And a lot of you guys do not live in areas, you don't live in California like I do. So you're not worried about $1 million properties. I'm just trying to say there are low down payment options to get into up to 4-unit properties and do the exact same strategy that I did when I started out. But the reason why I did it, as funny as this is, now it's so ironic and funny to me that I've put everything in, all my eggs in the real estate basket. It's so funny to me that the reason why I started all this is because I thought, if I buy a 2-unit property, because we were renting, we were in a duplex, we were living upstairs, there was a tenant downstairs. We said, why can't we be the ones to do something similar? And if we own something like this, what we can do is, our biggest expense right now is housing. If we could save $1,800 a month in housing, we can invest that in the stock market. And then that $1,800 a month, every month, compounded for the next 30 years would equal blah, 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 whatever. And then in 30 years, I'll have a couple $1 million that I can then be financially free through. Well, thankfully, I didn't just give up at that point. Once I bought our first property and realized, holy crap, we are living rent free because our tenant is paying our mortgage, right? That was in that scenario. If you're not living in it, you're getting cash flow. Our property is going to appreciate in value, both through market appreciation, right? Properties increase in value over time, on average 5%. I estimate around 3 to 4% when I underwrite, when I analyze, because I'm a little more conservative. But properties appreciate in value over time. We added value to the property. We forced appreciation by improving the property, close off some areas to make them more bedrooms, right? We appreciated the property. We took a property that was worth 180 when we bought it and sold it for closer to 360 within 2 years. Yes, the market did its thing during COVID, but we also forced appreciation. So we had the benefit of market appreciation and forced appreciation. You can't get that in stocks. Stocks appreciate or grow in value. You cannot like force appreciation. I can't tell the company, the stocks I'm invested in, to do something different to increase their value. It's not in my control. Then the debt pay down. It was this miracle. Like, not only am I getting cash flow, or in this instance, I was living rent free, where after we moved out, I was making $1,500 a month on this property. Not only were we getting that piece, the property was appreciating in value, is increasing in value, right? 180 to 360 in 2 years, right? Partially, we forced it through renovations. Part of it was the market, but then also my tenant, they're paying my mortgage. My tenant is paying my mortgage for me, and they're paying down the debt every single month for me. Every single month, my property is appreciating. My tenants are paying down my debt. I'm building more equity. So I'm getting cash flow to achieve financial freedom. And then I'm getting the wealth benefits coming from the equity, from the property value increasing, and from tenants paying down the debt. And then we learned about all the tax benefits of real estate investing. There's a lot of tax benefits for the property alone, but then there's something, you could become a real estate professional. You can achieve real estate professional status, which is what my wife did eventually. She made that her main focus. And that then allows you to take all of your income that comes in through real estate and all of your losses. Take all of your losses through real estate, losses on paper, property is depreciating, it's losing value, whatever, all those losses on paper, and then not have to pay any freaking taxes. My mentor makes so much freaking money, and he hasn't paid taxes in years. I make a pretty good amount of money, and I have not paid taxes in years because of real estate investing. So why is real estate the best path to financial freedom? Well, you don't just get the appreciation that a lot of people get through, let's say, stocks. You also get the cash flow that comes from that, right? Instead of the 4%, $2.5 million of stocks to get $100,000 a year that I can play with, which is then also taxed. I get that through cash flow. The properties are appreciating value. I can force appreciation to increase its value. My tenants are paying down my debt. They're building this equity. Not only am I getting this money, I don't have to sell anything. I keep the property. I have this equity. If I want to tap into it, I can refinance, get a line of credit, or sell it, tap into that equity. And then I get the tax benefits. I don't have to freaking pay taxes, which is incredible. Like, if you get $100,000 through your job, through stocks, whatever, and I get it through real estate, I keep $100,000. You end up getting 80, 60, whatever $1,000 left over. You're paying taxes on that. That is wasting some of your, or you just need more to get that same 100K. If you need 100K a year to live, you're going to need more than 100K after taxes to have that 100K. And I say all that to really highlight that I truly believe real estate is the best. And here's one of the biggest advantages that I didn't even mention. No one is going to give me a loan to go and buy stocks. No one's going to give you a loan to go buy stocks. The reason why real estate is so powerful is if you want to go buy that $1 million property for 5% down, $50,000 down, someone is financing that other $950,000. That's leverage. You're putting $50,000 in to control an asset worth $1 million, which is appreciating at the $1 million rate, which is going to generate you cash flow at that higher rate, which is going to get the debt pay down at that higher rate, which you're going to get the tax benefits at that higher rate, even though you only put $50,000 down. There's nothing else like it. And not only can you leverage debt from the traditional way through banks and all that, I have also grown my portfolio to over $20 million in the last 5 years using literally none of my own money. My first ever property, see, this is disingenuous because when people say that, I guess they don't account for closing costs and all that stuff. So when I did my first property, I put $13,000 down to take over this property through closing costs and all that. And I got a lot of credits. And so it was whatever. But the down payment was 0% down payment because it was a VA loan. Then I had so much equity in that property. I pulled that equity out through a home equity line of credit, use that to buy my next property. So yes, I put money down, but the money I put down was from the first property's equity that I took out as a loan to then pay for the next 3.5% down FHA loan on a 4-unit property. So all that to say, don't worry so much about the details of none of your own money and this and that. Like, you should have money. If you're going to invest in real estate, have money, have reserves, have safety, have all that stuff on the side, right? The reason why I've been really successful in real estate is I kept my job. I had other assets that I could tap into if I ever needed to. So I was lowering my risk if something went wrong. It's really important to have something to help lower your risk if something does go wrong. However, leverage. So you can get money from the bank. You can get money from, I do a lot of creative financing. So I get money from the sellers. I take over other people's loans for virtually, like, we bought a $2 million property. The seller got paid nothing. Agent got paid $9,000 for it, but we saved him from being in foreclosure. He would have lost his property. He would have lost the use of his VA loan forever. He was bleeding money, but we were able to solve that. And I was able to take a beautiful, amazing multi-million-dollar property in San Diego for literally no money down. So you can go creative. And then what I've done is, honestly, we've had to put in collectively to buy $20+ million of property. We've had to put in around $5 million to buy the properties, to renovate the properties, to furnish the properties, to rent them out, all that kind of stuff. But it was not my $5 million. I didn't have $5 million. I couldn't invest that $5 million. What I was able to do is raise money from other people who are looking for great investment opportunities, or those that are looking to earn great returns. Those are looking to jointly own with you, have ownership benefits with you, and those that are looking to learn through you, or all three. Some people are looking for all three, and I really cater to the people looking for all three, especially those that are looking to own and learn throughout the process. But that is how I've been able to buy my portfolio. So using bank debt, seller financing, other creative opportunities, and using other people's money by providing them a great investment opportunity, right? You can't get that anywhere else. You can ask your dad or your mom or someone in your family if you got that kind of money. I didn't have anything. So if you want to ask them, you can ask them to give you a $100,000 loan to go invest in the stock market. And in 40 years, it might be worth $1 million. You can definitely do that. I'm not saying you can't do that. You can definitely do that. But this is the entire business model based around real estate investing. It's all about this high leverage, leveraging really great debt to then buy assets that are cash flowing to help you achieve your financial freedom, right? On average, our properties, now they cash flow around $1,000 a month because we use the co-living model. We make much more money through the co-living model, renting it out by the room. And we're also providing an affordable housing option to people. So it's like a freaking 2-for-1. We're doing something that is massively needed. The government's not doing shit for anyone. The industries and private equity, they don't give a shit, right? But I'm able to provide great housing options that are affordable to people that need it, as well as get much higher returns than any other management strategy right now. And that is generating me significant cash flow that each one of these, even paying other people their money, I'm getting around $1,000 a month from these properties. Like, how would your life change if you could just add 1, 2, 3, 4, 5, 10 of those over the long term? $10,000 a month plus all this cash flow increases over time. Your rents go up over time and your expenses go up, but not nearly as much as your income. Your properties are also appreciating in value. Your tenants are paying down your debts. You're paying little to no taxes on your real estate income. And if you have real estate professional status, you're paying it on any other income. You're not paying taxes on that because it can offset all that stuff. The reason why real estate is so much better than any other strategy, I said for business and all that, I'm not a burn your boats, take a ton of risk, grind for 16 plus hours a day. That's not the way I operate. Sorry. I'll do 1 to 4 hours a day consistently for a long period of time. I don't want to sit there for 16, 20-hour days. I don't even know if that's possible. I'm just saying that's just crazy. What is the point of life if it's flying past you for this business or to take this massive risk? So real estate is much less risky and takes much less work. Let's say a business or a startup. That's why I think it's better than that. Compared to stocks, you get not just the appreciation like you get in stocks. Stocks increase in value, they appreciate. You get all of these other benefits, the cash flow, the forced appreciation, as well as the regular appreciation, the debt pay down, and the tax benefits. And then obviously a thing that takes it to the next level is leverage. You're able to buy hundreds of thousands, $1 million+ properties for a fraction of the cost. You get ownership of that asset for a fraction of the actual cost to enter that deal. There's nothing like it. There's literally nothing like it. So next week, what I'm going to talk about, I'm going to go much more in detail about the 5 ways that I earned through real estate. In that 5th one that I really love. And my mentor calls it the story. Some people have their own version of it. For me, I call it momentum because that's been the word in my life that means the most to me, momentum. Because once you get this thing going, it's so much easier with time. You're building your skills, your knowledge, your credibility, your resources, all these things you're building, and it just continues to compound just as your real estate portfolio and your assets continue to increase in value over time. So do your skills and your momentum as long as you keep trucking along consistently. That's actually the main reason why I do not believe in burnout hours, working so much that you're going to just burn yourself out and kill yourself really early in the journey. That's not how investing works. The longer you can sustain a good habit, the better the overall outcome. You don't get ripped at the gym by working out for 10 hours one day a year. It happens through 30 minutes to an hour, multiple times a week, consistently for a long enough period of time. That's everything, though. That's literally everything. If you want to avoid burnout, that is the way you should be operating. How can I spend 30 minutes, 10 minutes for some of you guys? Just do something consistently. 10 minutes, 30 minutes, an hour, maybe up to 4 hours a day. Maybe. I don't know what your lifestyle looks like. I didn't have kids at the time, so it's a little different. Consistently, multiple times a week, over a long enough period of time. Just see what that change looks like. Just give yourself 30 days and see where you were at from when you started to when you are at the end of 30 days. What about a full quarter, a year? Just see how much your life changes. I had this one very simple goal to eliminate my biggest expense when I bought my first property. And then I thought, oh, cool, I can do one of these every single year for the next 5 years. And then I did, instead of 5 properties, I own over 70 in that 5-year time span. So it's possible, and that's that momentum that builds for you. I have a lot of questions in here, which I love. Do you show lenders that you have skin in the game? I ask that because lenders like to see you have liquid. So I don't personally need to, but that's part of the momentum. I don't show them that I have any skin in the game. My skin in the game is finding the deal and my experience as an operator. When you are starting out, this is why I recommend, this is part of the leverage too. If you need a raise, if you need $50,000 to get into this deal, well, maybe you put in $10,000 and you have your partner put in $40,000. Right? I mean, I went straight to asking them to put in the whole amount. So I don't know what that's like. I never did that kind of fractional, I put in this, you put in that. But if you need to start out and you're just starting out, because I did my own properties before, right? I said I house hacked, I built that experience. For you, if you need to put in 10K or whatever, or a portion of it to show you have some skin in the game, do that. Isn't that still amazing? You're buying this hundreds of $1,000 property, I don't know, $500,000 property. Your partner's putting in the majority of the entry cost and you're putting in a tiny fraction to get ownership of that asset. It's freaking incredible. The next time you probably won't even have to do that because now you're building your credibility. And it is nice, in my opinion, to see you have liquid. So you have some capital set aside. That is good to have. I mean, I don't think you should be raising money for real estate unless you do have some money set aside, because then if something goes wrong, and this is real estate, things go wrong, then you can handle that, right? As opposed to having to give it all up or everything falters. Nikki, 100% bonus depreciation is enacted again. Absolutely. So you can get even more tax benefits now than you could have actually just a few weeks ago or even a year ago. This was something very popular. I'm not going to get into the weeds about bonus depreciation, but you can get way more tax benefits than you were ever able to before and way quicker. Feed Nix gave another example. This is exactly what I do. He says, create a LLC with dual ownership and use your capital/equity operating partners liquid as your skin. He's basically talking about private money partnership. The way that I buy a lot of my properties, I jointly own them with my partners. They bring in the money, I find the deal and I operate, and we own it together. And that's the way we do it, is we jointly own these properties. through the LLC. Fee Nix, I think that Nikki is specifically asking about showing that capital partner that you have some skin in the game, right? He's showing that capital partner that he has some skin in the game or giving them credibility before they lend him money. Not that you're showing the bank that you have. My boy said, yeah, appreciate you, brother. Join super investor community, makes cap raising such a breeze, plus a whole inventory of tools and resources at your disposal. I mean, he's not wrong, right? That's why I created Super Investors. It's literally the things I wish I knew 5 years ago when I started, things I wish I knew 3 years ago when I was overwhelmed with my real estate portfolio and did not know what my next step should be. And then the stuff I started implementing 2 years ago and continued to scale and compound to be able to massively grow my portfolio through advanced acquisition strategies, so leveraging creative financing, raising capital and making that a very efficient process. I mean, some of you guys have literally seen me raise $1 million+ live within hours, within a couple of days, raising $1 million+. And then really all the tools and resources you need to scale. So for those that are, you have a property or two, or maybe just a handful of properties, whatever. And we have people with 17+ properties in Super Investors, but you don't know how you can scale, and you're really looking to scale so you can become financially free, and you know you need some more tools in your tool belt. That is what Super Investors is for. So if that's you, reach out to me directly for that. That's all good. But I got a lot of free stuff for you guys too. Free Wealth Through Real Estate School community. Drop the link here. And then the obviously my YouTube and Instagram.